Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about Naked Brain Group going with the ticker NAKD. So I'm going to try to give you as much of an update onto this video as possible, followed by technical analysis. So without further ado, let's jump right into this one. So for this one, I covered it multiple times before. My last video is in the description below. But for today, I want to take a look into a couple of things. First off, Naked stock itself have historically jumped before with AMC and GME, and as they are actually building up some momentum, especially AMC, at least in the last week, this one's seen a tad of a jump on the last day on Friday, but it looks like there's a lot of resistance towards it, and I'll talk about this one. And I really don't think it's cover or naked shorts, etc. I think it's something a bit more systematic towards Naked itself. And another thing I do want to talk about as well is some of their press releases. Now, some of the press releases coming out from Naked Brands has been a little bit outdated. So April 30th is the last one really, going on towards voting relating towards the Benton and brick mortar operations and how they got the approval to selling it. They haven't been telling us much for the last month. Now, on the SEC filing, however, you get to see that there is currently an SEC filing dated 18th of May. Meanwhile, this doesn't really show you much. It's more of the usual kind of forms that they do submit, whether it be something like an F3 ASR or a Form 2 or 20F, my bad, etc. But institutional buyers seems to be a little bit weird about this one because they're not really picking it up. Blackstone Alternative took a short position on the 10th of May at around $39,000. So that is quite insane. But in a sense, it looks like there's not a lot of institutional interest. However, take a look into the EPS just alone this year. That's 98%. So that on its own is impressive. And when we look down towards the price over book, you're looking at 105. 105 is cheaper than what the SP 500 price over book is currently at. And I'm not saying it's the same. Like, take a look price over book for SP 500. It's 453. It's around 4.5 or 4 times cheaper than the SP 500 on the price over book part. Now, that's one fundamental. So, all right, we're going to ignore it there a second. Price over sales of 689. Currently it's 309. Yeah, technically it's double, but it kind of balances out. You're talking about 4 times and then double. So in a sense, it is still undervalued a little when you look at the price over book, a tad overvalued on price over sales. But here's what I'm telling you why it might not actually be overvalued. Because the price over sales currently for consumer cyclicals, you're looking into something like 10 and 20. And I've seen some stocks going on up to 40 price over sales. And so that alone is insane. Now, the EPS for the past 5 years have actually increased. So it does, if you look back into the history in terms of EPS, it looks good. Now, return on investments, return on expenses, assets, those don't really look good. But again, they divested from Benton and they're trying to go for a fully e-commerce kind of platform, which really can get you really further away. Now, there's some articles coming out as well from third parties saying reverse split is inevitable. It's gonna happen. You're gonna be stuck. Sell. Now, these are almost bashing kind of PRs that I really don't like the style of. That is not something where you educate someone. It's more to fearmonger to get them to sell. And I bet you probably they do have a short position. Now, nonetheless, they still have until October 25th, 2021 to be above $1 for 10 consecutive days. 10 consecutive days. Now, in a sense, do I think it's possible? They've done it before. They got the extension. They've done it before really well, and they're really close around 62 cents currently. They're not that far off. Now, in a sense, would they do a reverse split? Well, they have done reverse splits before. That's not out of the norm. It's actually in the SEC filing. If you control F reverse splits, you will find the histories of that. Last one was on December 2019. But in a sense, reverse splits aren't really the best thing for a company. But if they have to do it in order to sacrifice a bit of the price point towards going on towards fully e-commerce, it's not the end of the world. I think if you believe in this company and their e-commerce strategy coming forward, and they're almost basically no debt, many cash or holdings or insane amount of cash holdings thanks to offerings based on institutional buyers, not institutional, retail investors who saved them before, you can really be comfortable holding this one as a risky play. Now let's move on towards technical analysis, but right before then, if you would like to see more contents like this, make sure to click that subscribe button down at the bottom right and turn on the bell notification button. Don't forget to drop a like as well. Let's move on now towards technical analysis. Now, on the technical analysis standpoint, from a one-day perspective, what we get to see is that the price point currently is above all the averages, which is bullish on every front. It's definitely a massive bullish action that it took. 50 SMAs above 200 SMA, 10 SMAs above 30 SMA, and so it does sound like a lot of gibberish for you. But that's fine, because the only thing you need to know is that the current price point is actually bullish in almost every standpoint of view, and the current price point is, well, in a sense, I would say not bullish for long, but the MACD, the momentum are all pinpointing a bullish reversal in that sense. You're getting to see that they're actually climbing up a little bit higher, and it does look like something is building up in that sense. The William percent R is on neutral though, so mainly bullish, and the stochastic fast and stochastic slow both are telling you that there is another leg up, but be careful of resistances. Now, the stochastic fast and stochastic slow gave us that message, but the moving average bands are telling you that this is expected to trade at 62 cents in the top and 50 cents in the bottom. Now, this is a trend line that I drew before, and keep in mind that this one here, I just extended it a little bit to the right. I haven't changed the essential shape for it, and I said last time that around 50 cents is going to be testing it again. And take a look into really what happened is it bounced off the 50 cents. It went to test around the 76-ish cents. And currently, the current expectation, if it doesn't push a little bit further and you get a red day, you might have something similar happening to this and dropping back down towards the 50 cent. It's nothing bad towards it. It just oscillates back and forth in that sense. Now, there's another thing I do want to show you here is this trend line that was basically broken, because this trend line itself, if you were to draw a channel on it, you're able to see where it starts breaking. It is basically broken on the last day here on the right. I can delete some stuff here so you get to see that this red candle is actually above that trend line, so that is definitely a bullish move. Now, another thing I do want to give you here is the Fibonacci retracements, supports and resistance lines, because they do happen to work well with algorithms in general. So taking a quick look, and when I'm referring to algorithms, I'm talking about high frequency traders. Now, the current support resistance level, which is a key level for us, is around 85 cents. Above there, 133. Above there, 173. Above there, 212, 268, and 340. Now, if we were just to use a price line action, we can get the actual supports and resistances. The current support level, a very strong one, is at 59 cents. Below there, 50 cents. Below there, you're looking down at 34 cents, going down to 26 cents and to 18 cents. Significant resistances, you're looking up at 63 cents, following that 74 cents, following that 87 cents, 96 cents, and then of course a dollar is associated with the 96 cents, 108, and then from there on you're looking into 122, going a little bit further to 152, upwards to 187 and 225. And then we have the question to Ed, what do you think is going to happen here? I think that this one will trade a little bit sideways. It's not going to attach itself with AMC and JME for one reason, is that I don't think it's naked shorts. I think that perhaps a lot of these companies or a lot of these brokers that allow you to trade naked brands groups on their brokerage itself, on the firm, I think they do have some kind of limit, and you see it a little bit shady. You'll see like Robinhood restricting trading for a day or half a day, and then selling any margin positions. And the reason is that it's a lower cap, and margin calls get built up so quick onto this one as soon as you have volatility. And it's done in a systematical way that the institution would win always, and retail investors, if they're on margin, they get screwed. And that is a little bit of a fundamental of how a lot of these companies or brokers or discount brokers work to start with. They sell to companies like Citadel, all that different stuff. These are TD Amerites, Robinhood, Webull. They all operate the same because they got to make a buck on what they're actually trading. Now, there's, of course, a percentage, for instance, to how much they sell to each institution and to the market, etc. But I think that this is systematically brought down based on margin calls, and the people who are investing in it are a little bit suffering from trading movements and expecting for it to skyrocket like AMC while it's fundamentally being held down. And once they realize that it's not skyrocketing, they sell, bringing down the price even further. At least that's what I think. Now, from a price point perspective, I think in the next 2 years, this company here is going on through a massive pivot towards e-commerce. And if they pull it up, I can see this one being double easily. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.